right. Good afternoon, penny stock billionaires. It is 1 o'clock or moon o'clock, as we say here, when we were looking for these stocks which have 10x to 100x upside potential. I hope this mic is working. Big investment, over $100 in this microphone. And I want to make sure this is working. Okay, so today we're going to be looking at NEXCF, NEXCF. Why is this stock so hot? And here's everybody's asking, why are you pumping NEXCF? Why are you always focused? Well, it's very simple. Whenever you see a major trend reverse, emerge, the start, etc., that's a big deal, right? And that's when you see massive moves. So I'm showing you this little chart on the screen here. I'm watching the 200-day moving average, okay, the 50-day moving average. Those are big deals, and when you see stocks breaking above those moving averages, that's usually the beginning of a major uptrend, especially the 200-day, or vice versa, or the inverse of that, right? NEXCF, why is this such a big deal? Okay, so let me just get out of the way here so you can kind of see what is going on here. Here is a chart. This is entire history of NEXCF, and I made a little cartoon, little arrows here, which kind of show you what's going on here. This is the this is the 50-day. Okay, so I got the wrong chart here, but same basic idea. This shows you the 50-day moving average. Okay, by the way, anybody who knows the basics of technical analysis understands what it means when a stock breaks above moving average or below, right? That's like the basic thing of technical analysis. This is not like something which is it's like a chart pattern. It's not subjective. It is not like people have different opinions. No, it's black and white. It's black and white. Stocks breaking above moving average. This whole trading system is based on this stuff. There's people who have made, trillions of dollars by now with basic moving trading basic moving average, trend following, breakouts, etc. This has been around for 50 years plus, right? So this is not something that's up for debate. You do have stocks, obviously they can go up and down above the moving average. You could have a slight fake out, but overall the moving average is a trading system that is like, at one of the most basic things in the world of trading systems. So this is not something that is a subjective thing. It's not up for debate. So this is it's the real thing. So, basically what does it mean? Okay. So, when I started off actually I actually started off in the commodity futures business, and there was a guy, I think his name was Dennis Ritchie, I believe it was. This guy actually was started maybe 15 years early. I think he got started in this early 80s. He was a floor trader, but his whole system was based on trend following. Okay, there was guys. I think there's another guy, Ed Seykota, Seykota. These guys have made like, who knows how much money. Very simple trend following systems, and their whole thing is very simple. Once you see a trend develop, whether it's commodity futures, I don't care, it's pork bellies, coffee, NEXCF, whatever it is. Once the trend starts going, it just goes. It's a law of physics, right? And then when the trend breaks down, it goes in the other direction. And the moving average lets you basically follow that. So it's kind of the moving average. I look it up, Google it. It's very, very easy stuff. Anyway, so why am I talking about NEXCF? This chart shows you the 50-day moving average breakout. This is a couple of days ago. Every time you see this thing break above the moving average, good things start happening. Look at this. We've only seen like a legitimate breakout above the 50 three times in the past, and it's happening right now. So the last 3 times we saw moves of big moves, okay, like big moves from 50 cents to 250, from $1 to $10. This is the Canadian chart. American chart, you can figure it out. I'm just using that because it's a longer history. From $5 to $10 to $8. So big moves happen. Multi-dollar moves have happened in the past. Multi-dollar moves have happened. Okay, that's what the chart is telling you. It's not me saying it. I'm not making any predictions or anything. I'm just telling you what the chart is telling you, right? That's the 50-day. Now, let's go to the 200-day moving average. This is the big one. This is what we're waiting for, right? This is the 200-day moving average. This thing has only broken out above the moving average 1, 2. Okay, I said twice before. I was wrong. It's actually 3 times. 3 times it's happened, and it's happening again right now. The first time, as you can see, hang on a second. Let me get this off the screen here. As you can see, okay, actually, let me get myself off because you need to see the whole thing. This is much more important. As you can see, it happened way back over there, right? As you can see, this happened. It went from 60 cents Canadian to a high of $2.74. Okay, from 60 to 274. That's like a 4x, 5x move. The next time we broke out, it went from about $1.10 to $10. Okay, that was a 10x move. 10x. Okay, so let's just repeat that again. The first time it happened, it went from 60 cents to 280 basically, right? The next time it went from $1.15 to $10. Okay, that's the 200-day moving average I'm looking at. And then we had one fake out where it went from 550, it popped to about 650. So that was a fake out. But percentage wise, if you look at it, that indicator has a very strong history, right? And look at this. The other day we broke out above that moving average, and then we pulled back, which is, it happens. I would have loved to see, quite frankly, the stock kind of build a little base, kind of in this $1.18, $1.20 range, so above that moving average, which is at $1.18. If we can build something in a $1.20 range, that would have been much more bullish, a little flag. But it's a very challenging market, so we will see fake outs. And definitely, look, the algorithms, traders, everybody's watching this moving average thing. And a lot of guys, it's easy to manipulate stocks because they know they're watching. So if a stock breaks out, anytime it kind of slows down a little bit, guys will try to short it to shake people out. It also triggers other algorithms. So that could be a little bit what's happening. So I think basically the last 2 days we're having a normal pullback. I would say, look, here's the thing. Here's a stock that ran from 40 cents to $1.30. Was it $1.30? That's a 3x move. 3x, almost 4x, 400%. That's a big move, right? So it's normal to have at least a 30% pullback from that, right? So if you take, let's say $1.30 minus 40, 90 cents, it's pretty normal for this thing to be pulling back right to where we are. Even it could even go a little bit lower. I wouldn't be shocked. I would not be shocked because it needs to take a bit of a break. I mean, it's been on a tear, right? And then we could build a like a little bit of a consolidation in this area. I'm showing you the 15-minute chart. We could have a consolidation in this area, and that's what it looks like. What's happening right now? It looks like it's consolidating in this kind of $1.12 range, right? Before it makes the next leg up. Here's what's interesting. If you've noticed, it's basically been in this kind of range the last 2 days. It hasn't really gone lower. I mean, this morning it dropped and it came back. So that was a little bit of it opened higher than it dropped. So I wouldn't take that trade seriously, but basically it's been in this range here. And the selling volume has been much lower than the buying volume. That's a big deal. The selling volume has been much lower. So, by the way, if you're just watching our channel for the first time, click the dislike button, whatever you want to click on that. It helps the algorithm. Join, whatever, Wall Street Reporter also for all our good stuff. And I would recommend you join our Telegram channel, where we have daily stuff throughout the day. Because I don't really do these videos that much. I only do them when things are really moving. You know, I got other things to do during the day. So, yeah. Okay. Anyway, let me run this little disclaimer over here. Let me pull up the chart. Okay. So here's what's going on. We got the 15-minute chart. This is a 200-day moving average. Let me just show you this over here. Let me go back to the 50 because on the day trading thing, it's a little easier. Okay. So right now, technically we're below the 50-day moving average, or the 50 period. This is a 15-minute chart. So it needs to break out above this $1.16. That's the key resistance. If this stock breaks out, but let's call it $1, I would say the real number is like $1.21. That's the real number, $1.22. It needs to close above that. That's the pivot. Once it breaks out above that, again, there's not a lot of resistance to like the $2 range. So you can have a very quick run. Right now we're below it. So, you know, in theory, you know, if somebody was a day trader, if it was a systematic trader, you know, they'd be selling the stock over here and buying it back once it broke out above. But here's the thing. A lot of times with the moving average, you can see there's a lot of fake outs, you know, in this kind of, when you have this, it's just hanging out. Like you saw that over there, like last month, a couple of weeks ago, it was kind of trading in and out above that 50. So, you know, I think we're doing that same type of thing where, you know, it's not a high conviction, you know, break above or below, but we do need to be really above $1.20 for the trend to resume. Once we get, let's say $1.23, like, I mean, if you're like a low life day trader, you might want to set a buy stop like $1.23. Again, I'm not giving any advice here. I'm just kind of talking about momentum, the momentum action in this stock. Again, this is the, let me see here. Okay. Yes, this is a 15-minute chart. Let's look at the 30. Okay. So the 30, we're above the moving average. So that trend is still intact. Look at the MACD line. I think we're getting very close to a crossover. We're getting very close. We're approaching that. Probably end of today to Monday, we could see this happening. So Monday, I'm looking really for Monday to be potentially a day that you want to watch, right? Monday could be a big day in the market for this stock, for NEXCF, NEXCF. Today, we might close kind of in this trading range just to frustrate people because the market, you know, that's what the market wants to do. The market is here to, you know, create the path of maximum frustration. Yeah, take investors right to the breaking point. That's the way the market works. You know, it's if this was easy, everybody would be a billionaire. Yeah, so we're consolidating in this kind of $1.10, $1.20 range. We need to break out of this, and you can kind of see a triangle is starting to happen. I mean, I can draw. Let me draw. Let me see if on the 4 hour. No, the 4 hour, it's not really showing it. But if you look what's going on, I mean, this thing is kind of hanging in that range. It doesn't want to go lower. Again, this is the 50 chart. Let's go to the 1 day. Again, and if you're looking at the 1 day chart, we're above the 50-day moving average. And I've talked about this before. You see that gap, that widening gap. Let me draw you if you want the little what do you call it? The little Japanese, this is very bullish, by the way. Okay, so if you look at the gap is widening. Like we're getting that escape velocity. The gap between where the stock is now and the moving average, the gap is like, it's a really wide gap. So that's bullish. All right. So it's not like, it's a high conviction trade. Very high conviction means, you know, once it broke out, the market is like, okay, we're in. Right. If you saw it kind of hugging that moving average, yeah, that's which we're seeing right now. And a lot of these tech stocks, the disruptive innovators, that to me is not a, that to me basically is a stock that's trying to break out, but is struggling. It's a kind of like on the ropes. This is not on the ropes. This is like, you know, this is like a stock that's, you know, throwing a lot of punches, punching above its weight, in fact. So this is the candlestick chart. Let me zoom out. Yeah, just so you can see that. And again, I want to emphasize that, you know, what we're seeing is the volume on the selling days is much lighter. It's been much lighter, so which is bullish, right? So, you know, you got the volume has been increasing on the up days, on the green days, and the volume is lower on the you know, profit taking days. So I think that's what's happening. I mean, again, if you look, let's do a count here. And again, you know, the more I look at this, the more this makes sense. Let's look at what happens. Let's look at some history to show you what happens when NEXCF breaks out of these patterns. Okay, so I want you to look at this. Okay, so the first time we broke above the 50-day moving average, you had 1, 2, 3, 3 green days, followed by, you know, big, and there were big green days, right? Followed by 1, 2, 3 red days, 1 like neutral day, and then another green, a breakout, 1, 2, 3. Actually, you know, it's interesting. No, it's interesting. So this seems to be like a pattern, right? You got, you know, 3 days up or whatever it is, and 3 days neutral to down consolidation. This is what NEXCF is doing. It's consolidating here. You see this happen the last 2 times, right? Over here, June 21st, June 22nd, from June 22nd to June 27th, 5 days, we had a consolidation, little breakout, consolidation, 1, 2, 3, and then 1, 2, 3, 4, 5. Okay, so we've had 5 big green days, you know, in the last 5 trading sessions before the profit taking. Big green days, big volume, increasing, like a record volume, right? Record volume. And you know, you got this record volume on the green days. And so again, if you look at the pattern, right? Look at this uptrend pattern. You got 3 green days, 3 red days. So I wouldn't be surprised today. We probably might close a little bit lower. Even Monday, we might go a little bit lower. We might kind of hang out in this range a little bit, or neutral, whatever. And Tuesday could be the big breakout day. So again, if you're a day trader, whatever it is, you just want to do a swing trade, I'd be looking for a, you know, for position somewhere around here. Again, I'm not giving any type of advice, but you know, you kind of can see the pattern of what's going on, right? You can see the pattern for yourself. So I think we will see a breakout, probably could be Monday. Very high probability of a Tuesday big move. And again, you want to watch $1.22 type of number. That's $1.22. That's, you know, once it breaks from there, you could see some very strong momentum, like real FOMO. Again, it's look, we're seeing a trend reversal. This is what the chart is telling you. This is not me telling you. It's not my opinion. It's not, you know, like, it's not my opinion. I'm giving you, this is like scientific fact, science. Follow the science, okay? I mean, moving average trend following is a science, okay? It's not subjective. It's not an opinion thing. It's not me telling you. This stuff has been, you know, like scientifically proven for 50 years. Like, I'm talking about like billions of dollars, like, you know, Renaissance Capital, okay, you know, that guy Jamie Simons, whatever it is, multi-billionaire. What do you think he does? How do you think this guy's made, you know, multi-billions of dollars? How do you think, you know, Ken Griffin trades? They're trend followers. You know, all their black box systems, those are trend systems. They follow a breakout, and then, you know, they buy on a breakout, on a confirmation, and then they run with a trend, and they sell when the stock breaks the trend. You know, then they may have, you know, portfolio management. They may, you know, double up on a position. That's a whole, you know, that's how these guys can make big money, right? That's what separates them from, you know, the wannabes. But yeah, it's trend following. I mean, so this is, you know, I mean, again, imagine this. Imagine if all you did was just, you had a computer, a black box that traded NEXCF based on the moving average breakout. So you would have had some massive moves on this 50 moving average, right? You would have caught, again, the shorter the moving average, the more sensitive it is. So it's more prone to fake outs. A longer 200 day is better. But even on the 50, So basically on the 50, you would have caught a lot more of the moves earlier. You would have had a couple fake outs, but again, you would have been net ahead by a lot, like a lot. Yeah, I'm just curious. Let's see what the 100 looks like. Oh, this is interesting. Okay. 100. I mean, I don't know if it's 100. For some reason, people don't use a 100-day moving average. Interesting. Okay. Yeah, so I would say the 50, 200, yeah, it's the 100 doesn't really add any value. So yeah, so here we go. Here's is the 50. And things are looking very, very green, very, very bullish. Let's take a look. Let's do a little close up here, and then I will leave you. Okay, so this is the daily candlestick chart. And I'm going to leave you with the weekly right now. Okay. So here we are. This is the weekly chart of NEXCF, and I'm going to kind of leave you on this. There we go. Here we go. NEXCF weekly chart. Looks like an inverse head and shoulders happening, right? What's interesting is all of a sudden you had some big volume over the last month, right? So we know what's been going on. There was a fund that was getting out of a position, and that's kind of the capitulation phase. They triggered a lot of selling as well. So you had capitulation, a lot of trading, a lot of volume, and once you see a stock kind of break out after a lot of volume, that tells you the trend. That's another confirmation of a trend reversing, right? It's another confirmation of a trend reversing. So here we are on the weekly chart, and we have had 1, 2, 3, 4, 5. We're right at the 50-week moving average. We are right at that point, and we need to break above it. Now, look what happened every time we broke above the 50 moving average. The stock went from 90 cents. Was it no a little bit less? It was 50 cents. No, it's 50 cents to a high of 274 is a 5-bagger. It went from $1 to $10, so TenBagger. So on the 50-week moving average, every time, like literally every time, historically, every time the stock has broken above the 50-week moving average, it has increased between either 5x or 10x. I like those probabilities. I mean, if you showed me like some sort of bet, like some sort of bet where the proposition was 100% of the time it's increased, in other words, 100% winning rate, either 5x or 10x your money, I mean, that's a crazy proposition, right? Now, again, we're not saying that history is going to repeat. We're not making any type of forecast over there. But the chart is telling, it's not me. It's not my opinion. Okay. You got to argue with science. This is chart science. Every time on the weekly chart that NEXCF broke above the moving average, it increased, but either 5x or 10x, 500% or 1,000%. So, and now we're approaching the breakout. We touched it this week, but fell back, which is normal, right? Let me see. Has that happened before? Yeah, it's interesting. Look what happened here. March 22 of 2020. March 22, we touched it, closed below it again the next week, and then it broke out. April 5th, 2020, that week, April 5th. And then it ran from, a dollar, $1.12, $1.50 to $10. And this is the Canadian chart. I mean, again, do it backwards if you're American, so it's a little bit different. But yeah, I'm showing you the Canadian chart. But NEXCF, that's the one to trade. That's where the volume is right now. But the Canadian chart gives you the bigger history. That's the only reason I'm showing it to you. Even though I'm wearing my Order of Canada award today. So, the American stock is the one to trade. NEXCF is where it's at. Again, why am I doing this? Why am I, why am I on here? Like, wasting, 25 minutes, 1 o'clock Eastern time on a Friday afternoon. I could be playing golf right now. I'm about to leave, like literally right now, because, I got better things to do than, talk to knuckleheads on a Friday afternoon, right? The reason I'm doing this is quite frankly because it's a big deal. It's a big deal. What's happening right now in the chart is a huge, huge deal. And I'm trying to bring as much attention to it as possible. Okay. That's, that is my job as a stock promoter, as they say, as a stock promoter, as a stock tout. Now, as a paper, look here, my job is basically to bring attention to a stock's, the best aspects of it, whether it's the fundamentals, whether it's the technicals. I could talk about the fundamentals of NEXCF all day, but that's like, that's kind of subjective. That's just my opinion, basically, right? It's my analysis. But when it comes to moving averages, that's not debatable. It's not up for debate. That's like science. It's gravity. It's like the moving average is not up for debate. It's pure science. Momentum. Again, ask Ken Griffin. The guy's, what is he worth? I don't know, 20 billion. Ask Jamie Simons, another, guy, 20 billion. Yeah, ask them what they think of moving averages. Ask them what they think of this pattern. All right. I mean, I highly recommend it. So again, I do want to emphasize this. I'm repetitive. I know I'm repetitive because I'm only saying it again because it's so important to be aware of it. I'm not saying you should do anything. I'm not saying you should buy the stock, sell the stock. I don't care what you do. I mean, I really don't care what you do because the thing is, this is like beyond my control. It's the market. The market. I'm just telling you what the market wants to do right now. Look what happened. Look what happened. We're seeing the same pattern. Where it was below the moving average for like 2 weeks tradings. This was March, late March, first week of April 2020. The stock went from $1, $1.10, whatever it was, to $10 within 3 months. Am I saying that NEXCF is going to increase, from $1.13 to $10 by October, November? Am I saying it's going to be a TenBagger by November? Absolutely not. Absolutely not. I'm not making any projections. In fact, look, the Canadian regulations prevent me from telling you, how I feel about it and giving you any type of price projections. They don't like that. They're a nanny state. They think that, they think you guys can't decide for yourselves as Canadians. So they don't like that stuff. But here I am in America, free country, where we can't talk about these things. That's why I'm able to talk about it with American stocks, with free stocks. I can talk about it, but I can't talk about it, with stocks that are, domiciled in the slave states. So which is Canada, etc. So, but anyway, yeah. So here's very simple. Again, I'm not saying this thing is going to be a TenBagger, but the last time we saw this pattern, it did increase 10x. You got to decide for yourself. You got to decide for yourself what you think is going to happen. I think we're in a very different market, so I don't see a 10x move from here, quite frankly. I do see. I can tell you this much. I mean, and I hope I'm not like insulting anybody, but I think we're pretty much don't have any real resistance in this chart till, like I said, the $2 range, but it's really, if you look here, it's really the 250 range. It's really that kind of 250 range where you start seeing some resistance. Let me draw you a couple of charts, trend lines. Let me draw you a. I'm gonna make a nice big thick line so you can easily see it. Okay, so you got a line here. You got a kind of a line here, basically. You got this guy here. You might do that there. You might do this over here like that. So this is the Illuminati. This is the Illuminati chart over here. the Illuminati chart. As you can see on the Illuminati chart, what's going on here. Let me explain to you the Illuminati chart action. Support resistance lines. Those are your support resistance lines. So, you know, right now we're kind of in a no man's land. Again, I've said this before. We're in a vacuum here. There's a vacuum between where we are and this kind of like 250 range. This is like a no man's land. It's a vacuum, and the market loves to fill a vacuum. You know, we're above kind of support lines. You know, the support lines were in that kind of 50-cent range. There was a double bottom in that range, 40-cent range, and here we are. So you got resistance here, kind of, I would say 250, but it's really not. It's really like $3. I mean, on the weekly chart, the resistance is kind of in this $3 range, 311 to be honest. Actually, not to be honest, to be accurate, 311. I mean, it moves in time, right? So it's time price geometry. You got $6 resistance, and you know you can go all the way up, whatever. You can go, I don't know. I mean, geez, I don't think we're gonna have, you know. Yeah, but that's your chart, man. That's your chart. That day over here, this April, that's a pivotal day. So that's why I'm using that as a point in time. I mean, you could do others. It's going to be pretty much the same. They're all going to be the same, right? I mean, this is kind of, this is your Illuminati chart action. Once this thing breaks above the moving average, resistance $3. Resistance is futile. Resistance is futile. Okay, anyway, no advice here. I'm not saying it's going to $3. I'm not saying it's going to $10. I'm not saying it's going to go 5 cents. You got to decide for yourself. I'm just showing you charts. I'm just showing you chart science. Highly recommend you, you know, if you don't know anything about moving averages, you know, look it up on Google. What's a moving average, how it works, you know, trading systems based on moving average, and you know, decide for yourself. Decide for yourself. You know, I'm sure I'm going to be back here at some point very soon and for an update. And I think we'll have some very, very interesting things to be talking about. Okay, I am signing off. Have a wonderful weekend. Wonderful weekend to all you penny stock billionaires. Make sure you click the like, subscribe button. Tell all your idiot friends, and I will see you soon.